The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour. Dow's down 42 at 17,809. S&P's down 280 at 2,087. You've got the comp index down 1 at 48.93. Gold is down 1 at 12.25. Silver's up 9 cents at 16.35. Crude oil is down 49.32, down 24 cents. You've got high-grade copper up 130 at 2.11. Bonds are up 22 30-seconds at 164.09. This is a little weird with you've got Yellen, Fed Chairman Yellen talking tomorrow. And this is very interesting because right now you've got the dollar down 16 cents and 95.17. You remember for the last 2 days I've been talking about the dollar having a pullback at a peak D in the daily chart. That would help gold have a little bounce. We had a call from William yesterday from Singapore, and I suggested that he gets in right there. What was it, 10.22, I think it was, for gold, and it had a nice pop, but it isn't really doing much else. I mean, now it's just kind of stuck. So I just wanted to mention the founder of Hotcom. I'm a little slow when I hear these things, putting names and things together, but Mr. Gordon passed away, and that's really sad. I think he did a fantastic job at Hotcom, putting the whole thing together for over 12 years, 13 years now, I think. I've been using it, and TFNN, and just it really is a fantastic instrument, and they are truly faithful to trying to get everything within minutes. If there's ever even an issue, they'll be right there. So my condolences to the family. Really, very sad to hear that. And as I say, I had mentioned, I know Tom had mentioned it. I didn't realize, I didn't put the two together, but that was the Hotcom founder. So I wanted to just say that before we start the show. I'm looking at the 10-minute chart here of the E-mini. And the E-mini has made a peak F-top in the 10-minute chart, dropped quite sharply from the high of the day of 2091.75 and a pullback to the 2085, 84 level. This is going to be very interesting. The chart I really wanted to show you that I showed my subscribers, if I can pick it up right here, is this chart. This is what I showed my subscribers. You see the arrow where there was this channel, down channel, bounce, 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 like a yo-yo from the top of the channel to the bottom. And then it goes to the top of the channel, makes a B minus because it plunges down and starts a much deeper move. I put the arrow here for the same kind of pattern, even though I don't actually believe that the that the Dow is going to plummet the same way. I think it is. If it does, if there is a replication of this becoming a B minus because it fails sharply, I'm looking at the 17,333 level low that was made just a week and a half ago. I'm looking at that as possibly being the neckline. And if it does break that, it could go down a little deeper. But on the other hand, there are so many really important positives that I want to talk about those as well. So let me do this. I didn't quite finish the calls that I made yesterday, the answers to the questions. I'll get to some of that. Let me just do a couple of things here. Excuse me. I'm not sure just why this, when I'm doing my show, guess all those years of when I was a conductor yelling and screaming, and when I'm here, and those 3-4 day webinars that I would do 3 days in a row, full time, I guess I'm paying the penalty. Could have been a politician and got a hoarse voice from all the campaigning. What we're looking at here is this is so far a single leg up in the E-mini from the 2022 round number low that was made on May the 19th. Just even the red candle of the 23rd had a higher high. So so that it just kept continuing to rally up. And as I'm looking at this, I'm saying, hey, this is really fantastic, because look at the weekly chart. Look how close it's got, within about 42 points or so of the 2105.25 last major high. And that's going to be very important. Let me just get rid of that. There was a resistance area. And what we're looking at here is, if there is a chance of the single leg, the Chapman Wave single leg syndrome, where it runs up smartly in one move and then it gives it all back, that's a possibility. Because if Fed Chairman Yellen, even if they don't do anything tomorrow, but if they really start to threaten and say, everything we're looking at suggests that if these numbers continue to improve, in July we will raise rates. Or they might do it instantly. They can do it anytime. They don't have to do it on any predisposed announcement. They can just do it whenever it's appropriate. So I'm looking at this and I'm saying, wait a minute. I've looked at my Dow quartet, GE, which has held well. The weekly chart is not really good, but the monthly chart is really holding above the 9 EMA of 29.53. So far, this is very nice. Just the daily chart has had a very sharp pullback from 32 to 29, 3 points, 10%. It's par for the course, but we'll have to look at that in more detail after this weekend on Monday. Meantime, back at the ranch, what we have is IBM, which was one of the dogs, is acting extremely well. The monthly chart is still questionable, but the weekly chart says that if IBM at 151.21 can actually power above 154, 153.52 was peak A, and close there for a whole week, that's going to really improve the weekly chart, which of course will help the monthly chart. If it fails and closes under 3 points, instead of 3 points up, it's 3 points down, that's another negative. So let me show you something else. I go to Triple M, my Dow quartet, GE, IBM, Triple M, having a little tough time here, but that weekly chart is spectacular. Just look at it, that W formation that we were looking at for so long. Look at that W formation. It's a thing of beauty. Look at the U-shaped pattern in the monthly chart, and that monthly chart says at 170.50, we went to 171.27. So this is E/B. I could make a case for it being B, but I'm not going to yet. Month is not finished. But this is so far very good action. And UTX, not so good. It's really struggling, but it's not bad. It's just not looking great. Okay? So I've got a kind of a mixed market there. That's when I do my webinar a week from tonight. Let me just show you a couple of things here. Let me just go to the TFNN front page. Look at this. Front page of TFNN, wherever it disappeared to. Oh, it's over there now. I moved my charts around. Right there. The consequences of a new market high. That's implying that if we do get to a market high, look what I showed my subscribers this morning. I spoke about it. It's almost a year ago that I spoke about it in the Dow, more than a year ago. But the S&P, if I remember correctly, I brought that into the picture a little later. And if I can get to my chart, I'm going to show you something very interesting here. It's right there. Look at this chart, right, if I can find it, because I had to use it, my Snagit for many other things this morning. Uh-oh, where is it? Oh, there it is. Okay, so this is what we're looking at. I'll find it because it's so, there it is. This is the S&P with the Elliott wave analysis, wave 4. We go to wave 5 the moment we break the highs. I'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Even though I've really pushed on to about 3 or 4 different things in the break, I'm going to try my best to remember what I was doing beforehand. I was about to say a week from tonight, because the May candle will be completed, because the pattern I just discussed that has a match, I must go into a little bit more detail, with the May 19th high of last year, that down channel that finally went back to the resistance level and then smashed to the downside. Same thing happened in November, went back to the up channel, then smashed to the downside in late December, early January. Is this going to repeat? Well, 3 times. They don't usually happen exactly the same 3 times. They can, but it's not that often, as number one. And number two is, there are other things that are going on right now, including the IBB, the biotechs, just a whole bunch, a slew of things where there's a rotation that's going on that says maybe formerly weak is now going to be strong for a little while. Formerly strong is going to be weak for a little while. Maybe that'll include the commodities, because this is a very important moment for the dollar. And I'm going to be discussing that a week from tonight. I'm going to be discussing so many aspects that you'll just never hear anywhere else, because I'm going to be discussing fashion. I'm going to be discussing medical stuff. I'm going to be discussing just whatever comes to mind that I see is absolutely cigarette smoking with the 1920s, with what's going on here in other, the Sin City, right? So what we're looking at is parallels that are really, they're coming to a coda type climax as far as I can tell. Skyscrapers, the works. Interest rates. There's just an incredible amount. I'm going to try to organize my thoughts in that webinar, as I usually do, in a sequence that makes sense to you, with the trades that I'm looking at for the rest of the year, into the summer at least. Number one. Number two is, when we are looking at these, my webinar coming up on a Thursday week, a 90-minute webinar. This is open to subscribers, but you can get a subscription free for a month. This is a really special deal. And you can start the trades immediately. So we'll be talking about that. I want to go to that, but first I've got a question, and I want to deal with this question right away, because although tomorrow's Technical Friday, it's kind of an important moment. And the question is whether it's a peak C in the 10-minute chart of the IWM. And the IWM is the iShares Russell 2000 ETF. Well, I'm doing the notation from 12 o'clock at the low, most identifiable low. We're always looking for at least a peak D on the upside, and a 107.99 on the 19th of May at noon, we started a reversal that went to peak A, B, C, D. This is one of my favorite patterns. It's a combination of a Chapman Wave instant restart. It's kind of let's just make it simple. Within 3 bars, it goes to a higher high. Well, in this case, it's 4 bars. But the pattern was perfect for a peak D with a circle like an instant restart that takes you to another peak D. And that peak D comes into place at 11:40 on the 20th. Pulls back, trough A, trough B, and then it goes peak A, B, C, D, and within 2 bars, or 10-minute bars, it makes an E. There's a down arrow, it comes down, again, trough A, trough B. Remember, just 2 drops to the bottom can turn into a real nice buy signal. Just a trough A and a trough B, you're not going to a D. D says there's much more work to be done. Okay, so now it goes peak A at 111.18. 111.16 is the next peak, and therefore that's not a peak. That's a double top, pulls back, and then whoosh, it goes to B, C, and D. And that D right there, within 3 bars, turns around and goes, 4 bars, it goes to peak A, B, C, D, E, and that's the high at 10:50 Eastern Time on the 25th of May at 113.90. Then it starts to go sideways. Now, for those of you who know my work, I would have I don't usually trade, I don't trade the IWM. I shouldn't say usually I don't trade the IWM. But in this particular instance, I would put a rectangle, I'd look for a cup, I'd look for an arch, but I definitely would outline the high and the low. And that's really important because the high and the low is the high of 10 to 11 at 113.90 on the 25th, pulls back. Hey, 25th was yesterday. It makes a double bottom at 113.27, then 113.26 at 20 to 1 yesterday. And then it starts another move, and it doesn't take out the high. It goes peak A, pulls back, makes another A, pulls back. You can call that a B, and then it goes to a new recovery high. I always, when I see the cup formation, this is the drop bucket pattern. If you know my CD introducing the Chapman Wave methodology, I talk about these double top patterns. It's like the inverted H, lowercase h. And in this particular instance, I give it a parallel wave count. And the rule of thumb is in a cup formation, if you take out 1/3 to 1/2 from the lip, the bottom, to the cup, from the cup low to the lip high, on the way back for that handle and start to take it out, there's a real good chance that you're going to go to the bottom. And what do we do? The bottom is 113.26. We went to 113.25. We took it out by a penny. Now, these techniques, you see the pink line, the black line. Now the pink line is starting to trade below. And that says that 113.61, the 113.60 is going to be really key resistance. If it can't break above that, starts to make a lower low, we'll be looking all the way down to 112.93, the low of yesterday morning. Yes, 100 at 4 o'clock, at the close on the 25th. How can that be? Yeah, at 4 o'clock. Okay. So I hope that helps you. And the way that it's going to recycle, it has to go to a new recovery high above 114.01. That's the IWM. So I hope they helped on that particular call. Now I've got a couple of questions. Chart too small, please explain. Oh, the Dow. Okay, I'll do that. That's a good point. I don't like small charts. Let me show you something. This is what I'm talking about. When we go to the high that was made, May the 19th at 18,351, it's a peak B. IWM 10 minutes? I don't get that. Oh, yeah, you can call it a B, but it's an F/B. You can do that. I understand what you were doing. I did it a little bit more. I treated each peak from the bottom regardless. So, yeah, I understand peaking and the dead. So just wanted to clarify that. 18351, May the 19th, and then you start a series of lower lows and lower highs. And you've got this thick dashed line that broke the channel, and it broke the channel on the 20th of August. Now you get the comparison with that one and the peak F high right here on November the 3rd at 17,977, peak F top, and then you get the same thick dash trend line channel that says try to rally final time on the 29th of December, right at the end of the year, went to 17,750, and then started this absolute cascading move right down to the 20th of January at 15,450. So 3,000 points altogether. So from the top. Now, I've been talking about the same pattern, and patterns repeat over and over. Do they repeat 3 times? Well, sometimes there's a little difference. This one is a combination of the steepness of the first one, May of last year, and the consolidating pattern that you saw in November. And now this time we broke the channel resistance. That's important. But so far today, we've made a lower high. So this is why this is very important. I hope that helps you talking about the charts. I'll be right back. Basil Chapman, Tiger Technicians Hour. Dow's down 23.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. We're back. So I had a couple of questions. But what I wanted to deal with this, I needed to get to yesterday and today's. Yesterday, I was asked about the IYT. IYT is the iShares Dow Jones Transportation Average in Industrial Fund. That is so it's the transportation index, and it's a conglomerate of the rails, the truckers, the airlines, etc. No, there's no exception. It's those 3 groups. So what's happened is that the IYT made a peak F top, and then it snuck to it. This is, you see these double tops. Remember the double top we were looking at in Triple M? When we get to that, we saw that in the dollar, when you just sneak above the previous heights, like the H pattern in upside down, right? It's the inverse Y. And this is what we see, that Y pattern with the backwards Y, going from the top in IYT at 145.85 on the 21st of March, pulls back quite sharply to 136s, runs up again and just sneaks above that previous high, goes to 146.07, less than a point higher. And then what happens is it starts at 1/3 down, 1/2 down. That says, uh-oh, you're going to test the low. Be careful. Bam, it goes right to the low of 136.60 made in the 7th on the of April. On this, a month later, exactly, on the 6th of May, it goes to 136.51, tries to bounce, hits the 200-period moving average, pulls back, and now it's up against it. So I'm looking at this and I'm saying, I spent a lot of time on the IYT. I looked at a number of the different stocks within the group. I think that this is a very strong resistance zone and will be very clear. And this is part of what I'll be talking about a week from today, because I think by a week from today, we will have a lot of evidence that'll tell us whether or not this trend line resistance, I'd even go a little further. I'd actually like to see it go above to leg D of 146.07, the high that was made on the 22nd, the week of the 22nd of April. Why? I want to make this a support level, this whole resistance zone that has been for forever. I mean, just for a long time, since November of last year, November last year. Look, that resistance line, when you get the green, it means moving above it turns that dashed red line into support. So I want to be even stricter. I don't want to say just pop up because you've been making lower highs and lower lows for so long. I now want to see higher highs and higher lows. Okay, just make it real clear. If I'm looking at this, I'm saying the monthly chart is still good. It's not great, but it's pretty good. Okay, it's on the upside. It's above the inside Chapman Wave inside track support level, but the MACD is flattened out, stochastic. So I want to see the transportation move for that next big move to the upside. We are preparing for this chart right here, that there will be a failure because it's real easy. A break into the 18,000 area says, oh, mister, this is something different. The reason why we are long and we are short in the portfolio for subscribers is because I'm looking at stocks that are doing nicely. I don't want to not get into them because this could happen or that could happen. They look good now, we're in. They look bad now, we're out. We're short or we're out. And that's the way it is. And I'm kind of neutral now looking at the IBB. We've had fantastic success, about 130-something points we've garnered from it just on that one position of the IBB. I'm quite prepared to step aside a little bit. I don't mind going long. I don't mind going short. I'm just waiting for the evidence. And at this point, I'd say that there could be a bounce. But yes, I put for the shorting side, I said, everything looks right. What did I say? I said, tempting, but no. I said, you know what? We can miss a few points because I'll have more evidence tomorrow. My thinking is that this is what the pattern we're going to see, at least a test of the 20-period exponential moving average over the next 3-4 days in the 17,700 area. But I suggested if it even gets under 17,700, we're in for a little bit of a down move. I don't know yet whether it's the exact same copy. You'd think it would be, but there's a lot that's happened that's very different from the previous declines. Now let's go back to the questions that I had. Dow, yeah, repeat the pattern. That's what I just discussed. So, Bob, I'm discussing it in terms of I'm preparing for a repeat, but there's a lot of evidence that says there's a lot of cushioning, a lot of support, and there's a greater chance that we're going to try to make a new all-time high this summer rather than not. That's the way I'm looking at it. So the RB, we'll look at the RB contract. Am I looking at the wrong one? RBN. I don't believe I've updated the RBN. But we can look at it. It's not RBM. I'm going to go to N just for now. It's just because it's the June contract. RBN. I thought, didn't I have this all notated? RBN. A, B, C, D, E. Yeah, I'm just looking. I'm going to go, if you don't mind, I am going to go to the USO because that's already. This has gone to leg D. Crude oil, remember I said crude oil could go a little higher to help the USO get its D. So we've gone to a leg F. See, this is very important. Oh, I'm going to take a moment right now to just talk about my thinking right now, because I need to let it flow from one thought to the next. Otherwise, I can be all over the show thinking I know what I'm doing, but you might know what I'm doing. So let's just do this. I'm going to go, the crude oil is above the 20-period exponential moving average. It's at 49.50. It's made a leg F today. Could have recycled. I'm calling it a leg F for now. It's still a strong leg C in the weekly chart. So I don't have anything other than what would be a shorter-term sell signal that's possibly coming up in crude oil that could take crude oil down back into that whole 47, 46 area. That should be a good cushion. 45.70 is the 9-period moving average in the weekly chart. But I need to open this up so that you can see what's so exciting about this. This is the first time. Remember, I like to squeeze the chart. Now, all you need to be looking at is this beige coral-colored, brownish, I don't know what the color is, line. The last time that crude oil was even touching the 200-period exponential moving average was back in August of 2014 with the final touch the last week of September of 2014. And since then, it's tried to get close, couldn't do it, kept failing. Oh, those letters, all the letters are below because it gets smoothed out. My letters don't change. My letters stay where they are. The price gets changed. So the letters are correct, but the placement is not right. Now, look, we finally got a cluster pattern right here on the 200-period moving average. That means that that 200-period moving average is very significant. It's like a magnet. It means you can go a little higher, but you're probably going to have to come back and test it. It means you can get a little lower, but you're probably going to have to come back and test it. So I'm saying that we're in a trading, remember, I've spoken about this for a while. We're in a trading range that has, I said 49.25 was probably the high, but actually we've gone higher. We're into 50.21, so it's 50.25. I'm saying that the 51 to 45 is probably the trading range that I'd be looking at for crude oil for at least the next couple of weeks. The best has been done. Now it's starting to get a little tied, but shorted on a very quick trade, I'd say, okay, you could short it. But to tell you the truth, there are other things to short. You could get a nice trade, I suppose, from 49.50 to 48 or 47. Yeah, I'd say maybe you could short it now. I haven't quite got the signal yet. The day's young. So I got the signal. A, B, C, D, E, recycle. Yeah, I'm not going to rush into it. I'll look at it during the break. I'll be back. Basil Chapman, Tiger Technicians Hour. And I've got a couple of questions in the den I'm going to get to as well.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Folks, I got some really good questions. I'd like to do that, but what I'd like to say for my subscribers, there's that stock we got, ETF that we got, ETN actually, that we got stopped out of today. Yeah, for insurance, it was right at it was to the penny of our stop, but I still like it. So if you're really interested and you're looking at the chance that we could follow the map with a sudden move down tomorrow, pick that up. It was number 17 on my Traders Corner out of 20. That was number 17. I know it's not fair. I usually like to do this only for subscribers at 8:35 every day when I do this. But this is for those of you listening. I was kind of upset, and maybe you get stopped out again. I don't know. But this is just insurance. Don't get carried away. It's not like a whole position trade to make you a year. This is just something that says, hey, I want a little insurance. We've still got some insurance. That's okay. So I want to go to this. So DXGE, which is the Wisdom Tree Germany hedge fund, hedged equity fund, trading at 26.54. Yes, I think it really doesn't have all that much volume. I don't mind if there's no volume in an index that is following something much bigger, because it's not like a single stock that you can't get out of, which happens sometimes. This is different. So as a position, if you're thinking of this going higher, I would say that at 26.54, it's a little bit better than the other one mentioned, which was HEDJ. So DXGE is preferable, and also the chart pattern is a little bit better than HEDJ. Yeah, it's just a little bit stronger, and this is the Wisdom Tree Europe hedge. So one is Germany, the other is Europe. They kind of they're bound to go together. So that's the way I'm thinking about it. It doesn't matter because you're playing the trend. If you're wrong, you're just gonna have to get out, and that's all the is to it. But if you ask me about both of them, they kind of have the same pattern. I think that the one is just a tad stronger than the other, and that's DXGE. And I think that the volume in the HEDJ is much heavier than the other one. So I just wanted to do that. Oh man, let me just keep my eye on this. So funny, I can't get these letters here. DXGE, I hardly ever get a DXGE. That's why it's confusing. DXGE. Yeah, that's the one that has a slightly better chart formation right now, if you want to buy it. But they're both in the same area. The one is just a little closer to this left side high bar that it needs to take out. That's what I'm saying. Okay, now let's do this. So the IYT, needs to get into the 142, then 143, 144 quite quickly. And it needs to do that within the next 2 weeks. And that's going to say, okay, we're on our way. But right now it just says, nice rally, but it isn't the place to be. And if I'm looking at the XAL, there was a question yesterday. XAL is just going nowhere. This is the airline, the ARCA airline index. And that's really surprising because, crude oil is not that high. So this is a little weird. I think commuting is changing. I think it's changing. Travel is not so easy. I'm traveling this weekend. I hope I don't stand there for 3 hours waiting to be checked. Okay, so that's, and UNP, just real quickly, I want to do UNP. UNP is the same sort of thing as the airline index, and this is rails, Union Pacific. So something's going on that isn't quite right, which is otherwise I would have been with the SMHs. That's another question. Have had a fantastic move. Now they've slowed down at a leg C with a doji candle today, but the MACD is strong. The stochastics at 96% is broken out in the weekly chart. I think this is telling me a story, and it's telling me a story that things are going quite well, and that we've got to look at this. And it says, if I'm correct in reading this, if there's an accuracy in looking at the chart pattern and the patterns that are formed, it seems to me we have raised the base. It's at 56.21, and that makes the base of 54 to 53 kind of at this point, I think, a worst case basis. We could go to 52.73, the 9-period moving average. No, the 200-period simple exponential moving average. So the 4 points down, so there's like 8% down, and maybe only 2% up before it gets into a much stronger resistance. I want a little time. I want to see how it can hold the base. So that's that. That's including the SMHs. A question here, Tidewater TDW. TDW is, at this point, whoa. I think we looked at this before, and I said that maybe it's starting to try to form a base, but the monthly chart is still not good at all. And the weekly chart has this arch formation. And now look what's happened. It's down 31% at 4 point. Tidewater down at 30. It's at $4. This is a stock that was just a year ago. A year ago, it was in the 30 area. And 2 years ago, it was in the 60 area, 55, 60 area. Oh, my goodness. Something's not going well there at all. And what is the question? Tell me if I can just find it. Oh, Tidewater. And the OH, what does the chart say? The chart says for Tidewater that the tide is not only going out, it hasn't yet reached the bottom. This looks more like, was it Moses parting the Red Sea or Dead Sea, whatever it was? Wow, that's not good at all. So market vectors, oil services, ETF, nice little bounce. I'm treating it as a bounce right now. Will it get to a leg D above 30.47, the high of the week of the 29th of April? I think it will, but right now I think it's just choppy. It's got a lot of resistance. OIH at 28.25, up 2 cents. You know what? I'm not going to say whether it's, I would not go short, I would not go long. I'm going to give it another, today's Thursday, Friday. I'll talk about it Monday again, remind me. I need the 2 days. I need to see, can it hold 27.50s if there's a drop? Does it break above today's high, which would be really important, above 28.71, and it made a round number 28 low. If it closes under 28, that 28 could become very strong resistance. And as I say, I really do think we're going to be pulling back into the Fed speech tomorrow, and then we're going to be watched tomorrow really closely to see if patterns form. Dow goes into the 17,800. No, Dow goes into the 18,000s. We're talking about a different kettle of fish. So now here's another question. So John asks TBT and JO. Okay, TBT, which is the inverse of the TLT. Here's your TLT at 130.12. Here's your TBT, which is the inverse of the TLT. It's trading at 36.53. It's called the ultra short Lehman 20-year T-bond fund. Ultra short meaning, I think, 2 times short. Yeah. So if I'm looking at this, what I'm suggesting to you is that both the TLT, well, first of all, let me just show you this. TNX.X. This is the 10-year. And the 10-year looks very much like the TLT and at this particular point, and it's kind of stuck. And if you look at the chart pattern that's formed, I didn't finish off doing some of the work I wanted to do yesterday, and I can't even reach there. You'll hear that beep. This is going to go on for I don't know how long, because I finally found I haven't got the directions for this radio that keeps beeping away there. There it is. You know what? I'd like to talk about bonds in general and yields. I'll be doing a lot more Thursday a week. I'll be right back. Basil Chapman, Dow's down 32. I'll be back.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with swim lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks. So we're back, and we're looking at the TBT. My contention has been for well over a dozen years. It's probably, so where are we now? It was in the mid-1990s that I was talking about Japan is lowering rates. And then I said, one day countries tend to copy one another. At some point, the United States will Japanize our bond yields, and this is exactly what's going on. I don't see really what Janet Yellen speaks tomorrow at 1:15 p.m. Eastern time. Was a question from Bill. Yeah, that's the time. And so this tomorrow afternoon could be very interesting. And you don't have to get carried away. After all, if the market is going to go down, that means the market's going down. You can have plenty of time to start shorting. You don't have to get too carried away by preparing and getting all carried away. You guess, leverage 1,000% on the short side. You can have both sides. There's no problem with both sides. Just put stops in and buy stops. Don't get carried away. The trend the trend doesn't change on a dime, even if we dropped 150 points tomorrow or we went up 150 points. All it does is confirm something, and then you can trade in that direction. So don't get carried away. So yeah, this is what I'm looking at here. So two questions. One is that the Japanization of our bond yields, I think, is still going on. I'm not sure what the Fed can do right now, but our conditions are different to Japan. Japan didn't have quite as much. The market didn't make a fourfold increase from its lows. Just a lot of things are different. So we might have to say, this time could be different, but we'll only know if on Monday the market is trading deeply down, bond yields are much higher. That will be different. But if it just says, you know what, we can hold out until the next month and bad news could come out, whatever it is, we'll have to see. So don't get carried away. So the other question I had was, Joe is a coffee. Maybe Joe's coming down here because my wife had about a cup less the other day. Maybe that's what it was. iPath, Bloomberg, coffee. This is an ETN. I don't think this says very much for coffee at all on the upside. It says for the downside for sure. So no, I would not. All I can say is that if coffee takes out the low that was made at 17.92 on the 3rd of May, watch out below. Now, for those of you who are going to be taking off now for the long weekend, congratulations. Very nice job. We'll be here and we'll be giving you the shows. In fact, I will be doing Larry's show tomorrow as well, 9 o'clock. So I'll do 9 to 10, and then I'll do 11 to 12. And, of course, Thursday to 9. This is the perfect time to start getting used to my observations and my daily call. Just to read my Trader's Corner, I always send out, periodically I send out how to read the Trader's Corner. Once you get into it, it's just a snap, 1 line, 2 lines. It does it perfectly. And in the meantime, back at the ranch, the question was on C. And JP Morgan. So Citibank has given some, but it's holding quite nicely. JP Morgan is in fact holding very nicely. We are long the financials, the XLF in our Traders Corner. So I'm looking at this as if to say, stop us out. But in the meantime, you're looking quite good, and I'm going to try to go with the long side as long as possible. That's another tip-off. So what are we looking for tomorrow afternoon into Monday? The TLT has to rise or fall. If the TLT falls sharply, bond yields are going higher. If the bond yields go higher, you can expect the market to pull back and the VIX, the volatility index, to rally. So those are the criteria. Gold should shoot up to the upside, and my dollar, which is trading after a peak D, could have a deeper pullback. That's fine. We'll get stopped out for a profit. I don't care. But in the meantime, the 200-period moving average of the dollar is looking quite good at 95.87. It's trading at 95.19. So put that into your package. Not too much maybe will happen today. I'll be back with Tom later on today. Have a wonderful rest of the day and have a fantastic weekend if you're taking off. Otherwise, I'll see you tomorrow. Have a great day. Thanks for being here.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.